Next strategy here, nice and easy. This is the consolidation flip. This is a good one again for part-time traders, for people that have got full-time jobs that just want to start getting involved in the market. It does work. It's another fractal, so it works on the lower time frames. Just another strategy to use. Essentially, what you'll have is, I don't think I've gone over this in my previous videos, but I'll explain it now. I mean, it's fairly obvious for most. Most traders will know that this area here, right, is an area of consolidation, sideways movement, right, caught in here, and something like this is going to be a trending market, all right? It's a continuous move, whereas this is a continuous move sideways. So this is consolidation. What this means is that nor the buyers or the sellers are in control. There's a bit of indecision within the market. Nobody really knows if it's going up or down, or there's been no, driving factors that's going to take a decision. However, you can see here we break below. All right. So if this had come down here and closed back above, that would have been a swing failure. As I've said in the previous video, that could have been a trade to go long, target up to these highs, right? But in this case, it's not. It's closed back below the consolidation. So this is a consolidation flip. And I'm going to use this one because it's a really, really good one. It's on the daily again, so anyone can use it. You can enter on this candle. So, you're entering here. Stop loss goes at the top of the candle or at the top of the high, wherever you work out is good for you. And 2.5 days later, you're up 2.6R. All right, but that's a pretty good example because on the daily it happens really quickly because we had a lot of volatility within those times. Obviously, it happens the opposite way around. So what you're looking for is an obvious consolidation and then a close above this consolidation, right? This is similar to like a few of the older strategies that were around, I think, trading the stock markets. But you can have a look at this, for instance. Let's see if we can find a little bit of a better one. This is a pretty good area of consolidation. All right. So you got this area here, I would say, we get caught in. Right, so obviously that could have been a swing failure test, all right, but you might find that through your analysis that this is actually a less riskier trade. You're waiting for that confirmation. So like we said before, you got this area here of like consolidation. It's coming up, it's coming down, it's bounced here, it's bounced here, it's bounced here, bounced here, it's closed here, closed above. So your entry technique might be that now that it's had a daily close above consolidation, you're happy to long that. Stop loss goes below that candle within a few days. Within a few days, 1.51R, all right? And you draw this back out, so you've still got your main consolidation. Price comes back down to retest your consolidation. Fine, it's back within this zone, so you're happy if it comes and closes down here within the consolidation. You're happy to short that. What happens is, it pops back up. Again, you've got another entry. You're entering at the end of the day, and you're getting up here. Within a couple of days' time, if it's a swing trade, you're up 3 or 4R. Over a couple of weeks period, that is. So nice and easy strategy. You need to test it out yourself, back test it, figure out, if it's something that you like or you see something that's different there, something that you can work with. But essentially what you're saying is that you're waiting for price to consolidate and then move away. The second way of trading the consolidation flip, right, is, and this is a little bit more riskier, but it's a good way of trading and getting into a good position for a trade. So similar sort of entry as the swing failure one, but what you're looking for here, what you can see here, I've got a minute left to tell you about this one, a minute and a half, so try and make it quick. Consolidation, right, what you're seeing is price stabilizing plus time. That's what you're looking for. So it's here from the 18th of May all the way up to the 23rd of May. So it's had a good week of sitting at that price. Yeah, so it's got down here, wick. Right, you've seen like some sort of bullish engulfing here, come back down, you've got a nice pin bar off the bottom of a swing failure, pushes up, comes back down again. This area is strong, right? So what you do is you're looking for, that this is your area of consolidation, right? That this is your consolidation zone, roughly I would say is about here. Drop down to the 15-minute chart. Come on. And then you might go to your, you might go down to your candlesticks, right, and look for your entry. Yeah, so you know this is as a tight area they're looking for some sort of entry in, right? It's tested it, tested it, tested it, tested it, tested it. Then you might say, right, okay, well, here looks like a good place to enter, right? We've got bullish momentum, or here, you know, you're looking for a bullish candle, right? All right, and didn't really get one here. You got one here, say for instance on the 15-minute chart. You know that your stop loss is going to be below here, but what you're trying to do is you're trying to get your entry as close as possible to this here, right? Close as possible. So it comes back down to test this level. So you might bang a long position in here, right? You've got this bullish momentum. You've got your bullish pin bar right there. Drop your stop loss below these lows, because what essentially you're saying is that, you know, you're expecting this level to hold, this consolidation to hold. All right, and then you're zooming back out on your 4 hours. So you've got your entry nice and low. Oh, man, it's taking forever. All right. So your reason for getting into the trade is the 4 hourly consolidation spread over a week, right? So that's you sort of saying that you're interested now. Your entry was on the 15-minute pin bar. That gave you a nice tight little entry. Over the following sort of like intraday basis, you end up getting 3.8R. If you'd have moved your stop loss below this low here, for instance, saying you're not expecting it to come back down below here, well, that's a 7R. Anyway, that's going to come down to your analysis and where you put your stop losses. So that was a slightly longer video on the consolidation flip, and 2 different ways that you can enter on that. All right, sweet.